So the half-year results season is coming to an end, and the big five banks have set the pace for the rest of the industry after posting impressive results. But even though the banks are showcasing good form, the changing landscape in the sector brought about by new policies and rising competition threatens the status quo that has existed so far. And the banks are all in the process of reorganizing their plans and strategies going forward to ensure future success. Adelaide Changole has details.
Kenya has had a slow start to this year with less than stellar economic numbers, but banks have maintained their winning form, posting impressive results in the first half of the year. According to the results, the top five banks, which account for 56% of bank deposits, posted a cumulative jump of 18.47% in net profit for the first half of the year, from 26.06 billion last year to 30.88 billion shillings this year. The profits were driven by rising appetite for credit thanks to a steep drop in lending rates, which fell from a high of 20% in 2012 to 15.6% in June this year. And this saw the cumulative loan advances from the Big Five jump 23% from 692.65 billion last year to 853.7 billion, and boosted interest income by 8.06% year on year from 55 billion last year to 59.5 billion shillings this year. But with the advent of the Kenya Bank's referencing rate and the annual pricing rate that seeks to increase transparency, the margin that has allowed banks great returns will thin out as competition rises. To counter this, banks are already working to reduce costs and enhance efficiency.
So we can see them pushing to reduce the cost-to-income ratios. Of course, this increases your efficiency growth and it adds value to the shareholders.
Banks are also reducing their reliance on interest income and focusing on other sectors that can grow their non-funded income. Already, banks are rolling out new projects in real estate and investment banking, while others are rolling out payment solutions or partnering with other service providers to diversify their income sources.
For KCB, we have them partnering with Safaricom. They have an SME Smart product. For Equity, they have the MVNO license.
And as interest incomes come under pressure, banks will be looking to increase loan volumes going forward. The Big Five have said they will be targeting the country's SME sector, set to account for more than 80% of GDP. Adelaide Changole, KTN Business.